Bam, bam, ba-dum, bam, bam. You want to have your kids become rich and not have to work? Well, there's multiple ways to give them money. Bam, bam. Bam, 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 bam. Woo! Welcome back to Strongman Personal Finance, everybody. This was a paid video request. And if you want me to make a personalized video for you, you click that link, you send me money, and I'll make you a video. In this request, we're going to talk about giving money to your children, to the youngins, those young, beautiful children. How can you give them money, and how can you do it in a tax-advantaged manner? Can you just max your baby's Roth IRA every year? Max my son's IRA, max my daughter's IRA. Can you do that? How does that work? So let's go ahead and read the email this guy sent me. Keep him anonymous, of course. And we'll go from there. Hello, strong man. That's me. My wife and I are having a son next week. Congratulations. Yeah, it's like in a couple days probably. I want to start saving money for him for an eventual house purchase when he's 18 plus, or just get him started on saving for his retirement. If you are in this situation, which I am, or if you already have had experience with this, what would you preferably do? Now, everybody's situation is different. I'll just kind of explain to you the different accounts. What type of brokerage account that's tax advantageous so he can purchase a house? Examples of growth dividend ETFs that would go into such an account to maximize it over the 18 years. So first of all, just stopping right there. The best tax advantage account to buy a house is, in my opinion, none of them. Now, there's options to be able to pull money out of IRAs, and you can use that to buy a house. But if you're putting money into an IRA, you only get $6,500 a year. Every year, that's all you get per person. And if you put money in there and then you take it out to buy a house, well, that tax-free growth forever into the future is gone. If I was to buy a house, which I did, I'm in my house right now, I would literally just save money in a savings account, okay? If it was within the next year or two. Now, if it's 18 years in the future, or realistically 25 years probably, okay, I'd probably put that in stocks if I wanted to eventually sell it and give it to somebody else. But money that I'm going to use for a house, I would not put in an IRA, okay? Let's continue. Examples of growth dividend ETFs that would go into such an account to maximize it over 18. So I can't give specific recommendations. I would just keep it simple. Pick an index, pick a target retirement fund, pick something and just stick with it. There's target retirement funds out there like on Vanguard. They're super cheap, and you could pick one out for a targeted planned retirement of 2070. And it's one index fund. You put the money in it and you don't have to think about it. You don't want to like have all these ETFs and investments and stocks, and you're like trading your child's account. Just put it in an index. VT Sachs, VT Wax, you know, some type of target retirement fund, something like that. Just pick something and stick with it. You know, don't go crazy with it. And if you're going to buy dividend ETFs, I mean, dividends are taxed. Okay. Limits my wife and I can apply towards this account each year. So let's talk about the IRA first. Okay. With an IRA, your child has to have earned income. You can't just put money in an IRA for your child if they're not working, okay? And later on in the email, he talked about how he has his own business. If your child actually works and it's not a scam, which some people do that. They're like, oh, I can employ my child, because there are some benefits. Usually, it can get complicated, but there are benefits to paying your child. What was I saying? But if your child's not generating income, they're not working a job, they're not generating earned income, you can't put money in an IRA. Okay, so you can't just start maxing your son's IRA. Sadly, I wish I could do that. I would 100% do that, but you can't. So they have to start making money, okay? Let's see. Accounts that will give me control in the event he is not responsible enough to use it wisely. Don't want him to blow it on the foo-foo discords. Okay, so let's talk about tax-advantaged accounts. Not tax-advantaged accounts. Let's talk about control. We got to have control here, okay? So there's these accounts called UGMAs and UTMAs. And basically what they are is they're taxable brokerage accounts where there's no maximum content. Like, you can put in as much as you want, but you have to be aware of gift taxes, which we'll get into that later. You can put whatever you want into these UGMAs, UTMA brokerage accounts. They're taxable, so they're not tax advantaged. And guess what? At a certain age, your child is going to take control of it. You cannot stop that. It is an irrevocable gift. You put money in it in your child's name, you're the custodian. Once they hit a certain age, the money goes to them. I personally am hugely against these accounts. I am massive. I will never put my money for my children in UGMAs and UTMAs. Because if my children turn out to be freaking losers, which is possible, guess what? You don't have any control. Their money, that's their money. And it's going to them once they hit a certain age. And there's nothing you can do about it. And if your son is huge into Jeremy Lefebvre, that's what he looks. Guess what happens? Once the money goes to him, he can spend it however he wants. So if you want control, I would completely stay away from these UGMAs and UTMAs, okay? But what you can do, there's a couple tax-free investments, okay? But they're for specific purposes. So you have the College 529 plan. These things are basically, they're super versatile. And most states have, states are what sponsor the plan. They're very versatile. Basically, you can put money in, it grows tax-free, and if you take it out and spend it on qualified educational expenses, it's tax-free. Now, depending on the state you're in, you could potentially get more benefits on like your state tax return. For example, in Virginia, I can deduct from my Virginia taxes, my taxable income, contributions to a 529 plan. So I put $100 a month into each of my kids' accounts. No, it's I put 100 and then my parents like chip in some money. So basically me and my parents are both contributing. But when I do my taxes, I can save money on these 529 contributions, and they're for my kid's college. And you actually have control. It doesn't just pass to your kid. And if you want to like move the beneficiary around, maybe one kid doesn't go to college. There's multiple ways to do it. The only thing I would be aware of with these accounts, 529s, and I think a rule passed with a new like law in Congress. I think there's a rule, or they changed some of the rules, or they proposed it. Don't quote me. Or there's a way to somehow convert these to IRAs. I don't know exactly how that works. I'd have to do more research on that. But I think there are some changes coming to the 529s if you don't use them. Because what can happen is, let's say you put money into a 529, which I'm doing, right? And then your kids don't go to college. What are you going to do with the money? I mean, I guess you could keep it for your grandkids one day and you'll be dead. But the money that's in there, it's got to be spent basically on college, okay? And if you don't spend it on college, you take it out for another reason, it gets taxed and you get penalized. So I'm putting some money into the 529, so I put the money in, I pay tax, I put the money in. Well, I mean, I don't pay the Virginia tax on the contribution, but federal, there's no like federal deduction for this. I put the money in, it grows tax-free. I don't pay any taxes on the dividends, interest, gains and losses, capital gains distributions. I don't pay any tax on that. And if I did, I would know because I would get a tax form every year. Or at least they should send one to me if I am paying taxes. And then when you take the money out, if you spend it for the kids' college, it's good. So I like this. If you want control, you got to have this, okay? You 100%. And if you want to save for their college, this is what you should look into. It's a 529 plan. Every state has one. And there's actually not, like, you can use another state's plan. I use my state, Virginia, because I get the tax benefit. I can deduct it from my state return. It may be different from your state, wherever you live, okay? And then you have Coverdale IRAs, which it's not really an IRA. They're educational savings accounts allowing you to put $2,000 each year into whichever investment vehicle you use. They are not tax deductible. You can use the money for educational expenses at any level, including primary or secondary school, college, and universities. Basically, it's similar to the 529, but the 529, there's like no limit. Well, your state might, dictate a limit you can put in there. But the Coverdale, it's only $2,000 each year. So I personally use the 529. I don't care about the Coverdale. It's not really an IRA. And then you have obviously the Roth IRA, which with the Roth IRA, they have to have earned income. They have to work. Okay. So let's keep reading the email. I got to close this. I don't want to distinguish you or not distinguish you, reveal you. Accounts that give me, okay, any other ideas that may accomplish this goals? Okay, so when it comes to gifts, how the whole gift tax system works, you can give a certain amount of gifts every year. I believe it's $17,000 per person. So you and your wife can each give $17,000 to somebody as a gift each. So 17 plus 17, $34,000. without having to report to the government that you gave a gift. Now, if you go over that amount, you have to report the gift that you gave to the government. And basically, you have a lifetime limit of money that you can transfer. So when you die, let's say you gave a bunch of gifts and they were over, you gave $500,000 in gifts. Well, when your estate kicks in, you're dead, and they're looking at you and they're saying, okay, how much tax does he owe potentially for estate taxes or death taxes to the government? Well, those gifts that you gave count against your limit. So basically, the government tracks, so you should be filing gift tax returns. The government tracks how much money you've given over that limit, and that applies against you in death taxes. So what rich people do, right, is, they have the wife and the husband, and they each gift, $17,000 to each kid. Like, let's say they have 2 kids. Well, mom and dad give $17,000 each, $34,000 total to one kid, 17 per parent, and 17 to the other parent. And basically what that does is you don't have to report it. So you can pass income to your heirs without reporting it to the government, without paying tax on it. And the taxes come into play when you die, when you have the estate tax. Okay. So overall, that's something you could do. You could literally just invest some money however you want and then just give him money. Like, honestly, like if I'm a multi-millionaire and my kids aren't scumbags, yeah, I'll probably just sell some of my stocks and say, here you go, put this for a down payment. But if you give them an UMGA or an UTMA, I don't see the point of that, because you just have to, the money just gets transferred over to the kid. There's nothing you can do about it. So those are really the big ones. The 529, I would highly recommend you at least look into it. I wouldn't put all your money in there because that's just for school. That's an educational account. You can look at when your child starts making earned income, they have a job, then they can have an IRA. Okay, so if they have like a summer job, or maybe they're working for you, whatever, and they're actually doing legit work, okay, yeah, put some money in their IRA. 100% agree, but you can't just put it in there. So let's see what else. Let's see. Not sure if it'll make a difference or not, but I have an S corporation and my wife is a W-2 employee. Reach out. I mean, there's things on TikTok. Oh, employ your child and you can save taxes. I mean, I wouldn't even worry about that. The big things are, you need to be careful with UGMAs, UTMAs. If you want control, avoid them completely. And when your child starts working, start putting money in their IRA. And if you want to eventually give your child money for buying a house, okay, just sell some of your stocks. I mean, because the only other options are you give them control, which I wouldn't do. So that's kind of it overall. And you can just gift the money, as long as you stay under the gift tax limits, you don't have to report it to the government. So that's kind of it overall. There's not really much. It's not like this easy. Like, oh, here's a tax-free way to just give your kids money for free. If you do that, you can get in trouble. Okay, you got to be careful with all these clowns. Are like, oh yeah, if you do this with an S corporation, you pay your son for work. Yeah, his income's tax-free, and then you get to deduct it on your taxes. There's a lot of grifts out there. Okay, I would avoid that stuff. Just those are kind of your options. Hello, NVIDIA AI. It's a future bro bargain. $700 billion market cap. How are you doing today, strong man? I'm doing good, dude. WTF? What's going on? The clown market is back. I don't know. Thoughts on going to Japan for the RHC deployment to get a hot Japanese wife? I am just wondering how much Toyota and Sony stock I need to impress her. Do I have to file a form even if I donate under the 17K? No, you don't. That is the gift tax limit where you don't have to report. I am banning your wife. Okay, you do that. All right, that's pretty much, sorry, it's not a super long video, but there's really not much you can do. There's really not much you can do. But if you want control, don't do a UTMA. Don't do an UGMA. I'm telling you. 529, I would definitely look into that. That's for college. Coverdell, nah. And then when they start working, IRA. And then worst case, when the kid gets old enough and they're 25, sell some of your stocks and say, here you go. Here's a gift. Simple as that. All right, guys. Hope you enjoyed the video. If there are any more comments, strong, poor guy looking bloated. Thank you. Should I donate to Spencer's GoFundMe? Buy VT. Literally, the only way to make them rich is by whole life insurance when they're... Oh, no. No. Not whole life insurance. Do not buy that crap. Oh, it's tax-free. Blah, 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 blah. No, don't even get me started on whole life. It's a scam. Just buy VT. Palantir stock went up. Buy. It went up. Must not be eating Tattooed Chef. I'm not eating Tattooed Chef. 1 more year till certified CPA. You're almost there, bucko. This video is boring AF. Nobody cares about the accounting stuff, bro. Somebody cared enough to pay me for it, so I'm going to make a video about it. Thoughts on Tattooed Chef falling 40%. It's wonderful. I'm very happy about it. This was a paid video. If you want a paid video, then you click that link, you send me money, and I will make you a personalized video. And you better send me money because I want it. All right, guys, that's it for this one. Talk to you later. Cheers.